Mega cap tech names like Google, Meta, Nvidia, Microsoft, Amazon drove 43% of the S&P 500 gains in the first quarter of this year. This is according to Yahoo Finance calculations. So we're seeing a bit of a reversal here at the start of April. Can they keep up that momentum through the second quarter? Doesn't look like it so far. We want to bring in Ken Gorelski. He's Wells Fargo's senior analyst. Ken, let's just take a step back. What is your outlook here when it comes to big tech following that massive run-up that we saw not only in the first quarter, but going back to what we saw in 2023?
Right. Thank you so much for having me. So we're certainly most positive on Amazon of the big three, but we also recommend Meta. And we see really strong fundamental trends here. And I would say there are certainly pockets of the market where valuations look a bit stretched, but I would say that's not so much the case in these three. And so we prefer the fundamentals certainly in Amazon, our top pick, and Meta relative to Google.
Ken, I wonder, in how you're looking across some of the themes that were really drivers for the largest names in tech, where those themes either remain strong or where you're starting to see some weakness.
Sure, absolutely. Maybe let's start first with Amazon. 2023 was about an inflection in their business, in the two business lines. They have the retail business where it was really a margin inflection. Recall in 2022, margins went negative. There was an unprofitable retail business and it inflected to the positive in 2023. That continues into 24 and beyond. And advertising has been a strong driver of that, but they're also making many fundamental improvements in the logistics capabilities and efficiencies. So we expect margins to continue to inflect higher in the retail business. The second business, which is AWS, their cloud business, that was also an inflection in 2023, but that inflection was there after a steep decline of growth from 2022 to 2023. The business bottomed at 12% in the middle of the year, and we saw a slight uptick in the fourth quarter to 13%, and we expect that acceleration to continue starting in the first quarter with a plus 15 and exit the year at a higher rate in the high teens.
So can you compare that to what you're seeing play out over at Meta, one of your other stocks that you have an overweight rating on? You did recently just reduce your price target there. What does that upside look like then for Meta, the catalyst that's going to drive that movement?
Yeah, so Meta has been a fantastic performer, and I'd say it's been had really above trend growth here, and we expect above trend again in the first quarter. We raised our numbers slightly in the first quarter, and we expect another quarter, a strong guide in the second quarter. Now, the business will normalize from a growth rate perspective in the back half of the year. We're thinking more like mid-teens. Keeping in mind that's in a digital ad industry that's growing 12 to 13% for this year by our forecasts. So the business will certainly start to normalize growth. The key for us with Meta is thinking about that next product catalyst, that next product cycle, because we had Reels, which is their short video service, which was a headwind to revenues, but a positive for engagement. And think of this as the comparable business to TikTok's short video service. They've had a ton of traction. This is a business that's running more than a $20 billion revenue run right now, and it was a massive driver for 23. Will continue into 24, but it's a lessening contributor to growth. We're looking for those next product catalysts to drive above trend growth in the back half into 25.
There's a common denominator of digital advertising as well, Ken, among your coverage universe. I wonder how you're evaluating where a potential economic downturn and the likelihood of that is also correlated to what we might see for ad spends from companies as well as they look across their expense profile.
Yeah, absolutely. You have it right. Advertising is an output sector, right? You sell goods or you buy retailers buy inventory and then they advertise, right? So advertising is an output sector. So clearly we need to watch some of those inputs. And there are certainly mixed signs on the consumer front. I would say the way we ground our estimates is we really think about the core of advertising as highly correlated of digital advertising, highly correlated to e-commerce growth. And we really, our goal is to kind of track those levels. And so again, we see low teens, 12 to 13% growth this year. a modest decel next year, but we still see relatively healthy trends. But it is for sure, to your point, it is mixed. You see some weaker areas like food and beverage or some of the consumer product areas. Even travel is a bit mixed in terms of its marketing spend. But in the core e-commerce categories, when we're seeing a lot of strength out of overseas shippers, those core e-commerce categories continue to be quite healthy.
Who's the weakest in the digital advertising landscape already right now, Ken?
So the weakest right now is anything in the brand world for sure, right? The old display business, the banner ad business, that business is really weak right now. But I would just, and I would maybe take a step forward now. Now, Google Search has been a very healthy business. It's a massive business, 55% of Google revenues, well in excess of 100% of operating profit in our view. That's a business that has been losing market share. And really where it's been losing market share is to this concept of retail media. Retail media, think about advertising on Amazon, on Walmart, and these transactional platforms, these marketplaces. Between 2019 and 2023, Google Search lost 4 points of digital ad market share. Retail media picked up 4 points, and that should come as no surprise.
Yeah, I feel like I just saw in the, of course, card providers escaping me as of right now, but I just saw some media network get launched here today by one of the traditional card players, and that kind of speaks exactly to what you were talking about in terms of the media advertising as well here. Ken, thanks so much for taking the time here with us this morning. Really appreciate it. Wells Fargo Senior Analyst.